Welcome to the first Cycle Courier Network, or CCN, video. This channel is geared mainly to bike couriers, but you will find specific information for car couriers as well, kind of like in this video, and overlap from the bike courier to the car courier information, again, like in this video. Now, there wasn't a lot of information, actually there's almost none, when it comes to taxes with courier work. And so we figured this would be a great opportunity to share this information, mainly because we actually have a lot more obligations than we think. There's a lot of stuff that wasn't told. So this video is here to help fix that problem. So how this video works: if you have a specific question or questions, you can look at the timestamps for this video in the description below. You go through, you see what question, if your question's asked, and you're like, okay, it's there, you watch that segment. You do that with all the questions you have. Or you can watch the entire thing. The options are there for both. And if you find this video informative and helpful, subscribe. Subscribe so you can see other informative videos like this. And also give us a big thumbs up and comment below if you want to comment below. All right, let's get to the video.
I think a place to start is none of you are ever going to be receiving a T-slip for the work you're doing with Fedora. And a T-slip is a tax slip like a T4 or a T5 from the bank. You may get a T4A, which is kind of like a catch-all for other income. A lot of independent contractors get that. So you may get that from time to time. I don't really think with Fedora, but just other independent contractor work you might do. But otherwise, you are effectively responsible for managing, tracking your income and your expenses, saving for income tax and Canada Pension Plan, and paying that up annually or in some cases quarterly, and we'll talk about that in a minute. With that, there's a lot of pressure on you guys as individuals to be managing your books relatively well. Now, there's plenty of software out there to talk about, and we will talk about that will help with this stuff, all on your phone. So if you have a phone, you don't even have to worry about a computer or anything like that. Now, if Fedora doesn't issue you a T4A, you could theoretically tell the government you made $10,000. Doesn't matter. But if Fedora issues you a T4A and it says $50,000, you better report 50 because the government has that exact same piece of information.
So sections that ask for T4A.
Yes. Yes. Yeah, on the tax software and whatnot. So T4A, also really quick touch on that. If you get one as a courier or a self-employed person, it's going to be box 48 on there. So a T4A is blank, basically, and then they fill in a box number. So it's going to be box 48 and then an amount. In the tax software, whatever you're using, you're going to type in T4A to find this slip in the tax software. Then you're going to put in the number under that box name. Yeah. Then the system is going to say, what self-employed income sheet do you want to attach this T4A to? Then you have, like if I have a client who gets issued a T4A, but they're not freelance, they just did a couple of odd jobs, $1,000. We have to create the self-employed sheets for them. They have no expenses, but that T4A income falls into self-employed income. It's just a more formal way of tracking it. Does that make sense? Kind of, right? Yeah. That if you have a T4A, put it in the system. If you don't have one, the system says, do you have one? You say no. Basically it. Because the income is going to end up on the same T21, 25 forms at the end of the day. We have two types of pension retirement here. So we have Canada Pension Plan, right? CPP, which as an employee is taken off your check as well, right? You pay 4.5% and your boss pays 4.5%, right? As a self-employed person, you pay the full 9.9, 10%, okay? That gets calculated with your taxes at the same time. So if you prepare your numbers for 2018 and someone says to you, okay, or the system says, your tax bill this year is $5,000, that includes the CPP. That's total. CPP, to me, I call it the self-employed killer. Because I've had clients who've netted out, so income after expenses, I don't know, say $14,000, $15,000, right? Their tax bill, because it's broken out on any tax form, their federal tax bill is like $250. Provincial tax bill, another, I don't know, $250, right? So they're $500. But their CPP bill is like $1,200 alone. So that's a total bill of what, $1,700. And they're like, I made $15,000. How do I owe $1,700? Right? That doesn't sound right. It's Canada Pension Plan. Okay? So at the early stages, if you're making kind of like 10 to 20, 25, CPP is going to be the majority of your entire tax bill for that year. There's no way to opt out of CPP. There's also no way to opt in. Yeah, we can't opt out.
Sure, you turn 65.
Turn 65 or turn 60 and send in that that form, which I had one client do ever, and he loved it.
So that's calculated automatically, so it's not something that we need to worry
No, it's not
about.
something you need to worry about. No, what you need to worry about when we say your tax bill, that's everything inclusive except sales tax. So that's your CPP and your income tax on both levels, federal and provincial. Employment insurance, you guys don't qualify for, so you don't pay it. So don't even worry about that. Don't go down to Service Canada if you hurt yourself to try and get some money from them, because they're not going to give it to you. Self-employed people can participate in EI if they want to. Okay, you have to go to Service
let's say
Canada
like
to do
a car
it.
hits me, I can't work tomorrow. I know Fedora has WSIB, but like
Yeah, EI is tricky that way.
I got
So
a solution for you.
even if you register into it, they might not help you that much if you opted in, because it's primarily for contractors or self-employed people to go on mat leave and paternity leave. Right? It's not as much as employment insurance. It's like you're in an office and you get hurt, you go on, or get fired, you go on leave.
so like if
Not
for
the same.
example Fedora just shut its business down tomorrow and
You're not going to
overall
Service Canada.
there's just no.
You get nothing.
Wow.
Nothing.
Yeah.
But that's okay. You know that. Right? We all get nothing. We're all in this together.
So basically, there's a few companies. One that I purchased for injury insurance, right? Which is someone like me. I run a shop. I'm not on the road every day like I used to be, but I ride everywhere.
Yeah.
If I get hurt,
You
who's
know,
gonna keep the shop open?
That's
no
right.
one
You need to
do
protect it.
everything I can do, right? So I pay $50 a month.
You can be
That's not
honest.
bad.
You can be honest.
Well,
you can be honest.
it was partially my fault, but his dog bit me. So
Ah,
scar
okay.
there, and I got $4,200 for that.
2 stitches.
Where's your
a
dog?
bit,
What's that?
No, I said, where's your dog?
Well, you gotta sign up with
Yeah,
the
you gotta
insurance
sign up
policy
first.
first.
Okay,
You
okay.
can't
Go
go
sick the dog.
I'll come see you next week.
Well,
But yeah, that's
we'll be
completely
doing a
separate.
seminar with
Yeah.
with my guy, which is kind of funny. Like he was just outside the shop going to a show next door, and he was like, oh, I like the design of the ceiling, da da da.
Yeah.
And I'm like, oh, I was taking out the trash. I'm like, why don't you come on in? And he's like, listen, let me ask you something. What happens if you get hurt? Right. So if you get hurt, so let's say you spend a month in a hospital. Let's say it's something really
Yeah,
serious,
severe.
right? But you're talking about there's parking fees, there's room fees, then there's keeping your apartment in your name,
Yeah.
paying your bills, paying your electrical, and if you have savings, that's great. But then you've just destroyed all your savings.
Yeah.
So it's $50 a month, which arguably I don't know what it costs to be an EI. Maybe you.
It's like $900 a year, so it's more expensive,
So it's more expensive.
and you get less.
More expensive to be on
You don't-
EI,
you don't
and
get
you get
the-
less. This is personal injury
Yeah,
insurance.
that's injury not.
$4,200 for a scar. What is it for breaking a leg? A lot.
Yeah,
He was off work for 2 days.
yeah. That's not employment related, right? That's great for you guys specifically. Like it's not something. I mean, it's something I should
Anybody
consider.
can take it every day.
Is that a health thing?
You can
Pardon?
claim
Oh no,
that.
that's personal injury. That shouldn't be part of it because your premiums are not taxable, right?
But here's the
So-
thing,
No, your
here's the
your
thing, as
premiums are not
careers-
deductible, but your payout, that $4,200, not taxable,
Sorry.
right? That's why we don't have to worry about
Right.
it. Health
Not to
insurance
cut
is
you off.
different. Like health insurance, like where medical, dental, prescriptions that they
Yeah.
cover, that's different,
Okay.
right? You do get to expense that. Okay, the biggest confusion is the terminology. You guys, independent contractors, freelancers, self-employed, are all basically the same thing. Okay? The only time a sole proprietor, a self-employed individual, a freelancer is different is if they have created a separate corporation. Now I have had 3 years ago one rider who actually did that, but that was because he had other income. I can't remember what he was doing, but other self-employment income, and it made it more beneficial. That income plus his riding income go incorporated because he's making enough money to warrant that type of business structure. But otherwise, everyone here is self-employed, sole proprietor, independent, freelancer, whatever you want to call yourself. It doesn't matter. There's only a tax advantage if you're making enough money after expenses. So The organization, the financial organizational structure that you're going to continue to do, tracking your income and tracking expenses, whether you're a self-employed freelancer, writer, or you're incorporated, is the same, right? Because that's all we care about is money in and money out. That's it. That's what business is. So when it becomes beneficial to incorporate is when your overall income, taxable income, so you're not just your collected, but you're collected after expenses, hits somewhere in the realm of like 40K. Once you get to like 40, you should really start thinking about what next year's going to look like. Anything above 40 is probably worth making that business structure switch. And anything under that, you're going to pay an almost equivalent amount of tax. You make $30,000 and you funnel it through your corporation and pay you out personally, or you just run it through your sole proprietor, it's going to be very similar. No, it's less. That's why if you make more money personally, you want to switch to a corporate structure because their corporate tax rate is far less. If an employee makes $100,000, they pay what? 30%, 32%. If a corporation makes $100,000, they pay somewhere closer to, in Ontario specifically, somewhere closer to about 14%. Okay, and so that's when you would consider switching. And then you have to take some of that money out of the corporation and pay a little bit more personal tax, not double tax, just a little bit more. But overall, it tends to work out better once you start making taxable income over 40, 50K mostly. Anything beyond that, you don't want to worry about the administrative headache. The second tax filing, once you have a corporation, you're doing personal and corporate. Okay, you don't want to deal with that. So yeah, your income's at 40K, 50K after expenses. Yeah, you don't really have to worry about it unless you're going to have a breakout year the following year. Then you want to consider switching. Creating a corporation. When someone creates a business, like I was a sole proprietor when I first started, just like you guys. I was running it out of my shop. I was just doing my own thing while I had a regular job in university, right? Yeah. So I was just putting it all in my personal taxes. This is my income. These are my costs. How much extra tax do I have to pay or not pay? And that was easy. And then eventually you go full time into your business, right? And you're still filing self-employed. But you get to a point where you're making enough money that it's worth the transition into a corporation. And what that transition is not that you're moving into a corporation. You're going to the government website or a lawyer or an accountant or someone or the website to create a corporation where you are the director of it. Okay? So if someone, I don't say I'm self-employed, say I work for an accounting company. Happens to be mine, sure, but I'm an employee basically of that company because when you create a corporation, you've created a separate legal entity. Someone, a thing that can be sued, that has to have its own bank account, it has its own tax problems, right? That's what a corporation is. So you don't want to deal with that if you're not making enough money to make it worth filing 2 sets of taxes and worrying about everything times 2. So going through the incorporation process online is easy, takes about 20 minutes, and you basically fill out your business information, but then you fill out yours, and you are the director of. Therefore, you are the person representing this corporation. Okay, so as a sole proprietor right now, if you guys make $1,000, you can take that 1,000, or you can take half of it, let's say 500, and you put it on rent, you put it on beer, you put it on whatever you want. Whereas a corporation, if a corporation gets paid $1,000 and you take out 500, you have to record how you're taking that out personally because now that's your personal income. You're taking it from the company, which is why you don't really want to be dealing with that structure too much, which is fine. But again, it's after expense income. Doesn't matter if you make 80K, if your costs are 60 and you only make 20, stay a sole proprietor. Don't even stress, unless your liability in the business is high. Like if someone opens up this shop or a cafe, they better be incorporated right away for slip and falls or for food poisoning, something like that. As a sole proprietor or a freelancer or an independent writer, whatever, you don't have to do anything to be a self-employed person. Okay? In Canada, a self-employed income is the catch-all for income that doesn't have a place. Right? So investment income has a place with the banks. Employment income, place with your job. But if someone gives you $500 to paint a fence and they want a receipt, where does that income go? You're self-employed at that point. You're self-employed fence painter or an odd jobs person if you do a bunch of little jobs, right? In Canada, we can operate any business we want under our first and last name automatically. So you can issue invoices and do anything. There's no registration required. Only forms of registration as a sole proprietor, there are 2. 1, business name. If you don't want to be called your first and last name, you want to be called something different and start creating a brand but still stay self-employed, you can apply to the Ontario government. It's called the Business Registration Online, and you can create and you can purchase a master business license that gives you the ability to operate using that trade name, but you're still self-employed using that trade name. So on your invoices, it can be Patrick's Bike Shop instead of Patrick Payne, right? As on my invoices. But I've registered the trade name. But I'm not incorporated. I'm still self-employed. Okay? That's just the name. The other registration that you may or may not have to do is the sales tax registration. You don't have to do that registration right off the bat, but once your collected sales in a calendar year, typically, it's technically in a 12-month period, but typically in a calendar year, hits 30,000, you're supposed to register with the government and start collecting HST, because we're in Ontario, from your customers. Tax, at the end of the day, it's going on your personal tax form. You're not filling out separate business taxes or corporate tax return, because it's separate from personal. You're just adding additional forms to your one personal tax. Now, in addition to the taxes, we'll get into the sales tax side, but you could also be potentially responsible for collecting and remitting sales tax, HST otherwise, or GST in other provinces. The way HST rules work, and when I say HST, it also applies to GST. It doesn't apply to PST, which is provincial sales tax for other provinces like BC, I think Saskatchewan has it, Manitoba. That's basically it, because we've amalgamated HST, the Atlantic province is HST. If you, let's say you start a business, let's say today is your day one, you've registered with Fedora, you're going to be a writer. You don't need a business name, because who cares about operating under a trade name, so you don't have to worry about that side of things. But you're going to decide, should you register for sales tax right now, or wait? If you earn an income in 12 months, under collected income, not after expenses, under 30,000, it is a voluntary registration. So if day one I say, yep, I'm going to start charging sales tax, then from that day you register onwards, all your invoices have to have the extra 13% built in, because you're going to collect that 13%, you're going to save it, and at the end of the year you're going to give it to the government. Their money is not yours. Okay? But under 30,000, that's a voluntary program. So if you're saying like, nah, I don't want to worry about it, I'm only going to do this part-time, not a big deal, then you don't register. If you turn it into full-time, thinking it was part-time, you turn it into full-time, and then by August, you've collected from Fedora, or from anybody, $30,000 worth of sales. You're supposed to then call the government and say, hey, I need to open up an HST account, and you call Fedora and you say, hey, I'm charging you sales tax now, here's my sales tax number, and then you start collecting it from then onwards forever. Even if the following year you only make 20,000, it should be 20,000 plus HST.
With this sort of like gig-based work, like
you don't know.
we could easily be over or under, so
Yeah.
it really seems like something that they could be challenged on.
Well, you still have to report some kind of income at the end of the year. So
Yeah.
if you report 36,000, the government's going to say, well, where's our HST on the 6th?
Oh, so it's after the 30,000 they charge.
It's after you have to start charging. But okay, so for example, let's say this is the case.
Okay, so it's not for the 36.
No.
It's for
It's for when you were supposed to. Yeah. So let's
Okay.
put it this way: year one, you make 20K. No need for HST. Don't sweat it. Don't register and don't start charging. Cool. Year two, we're not super organized. That's fine. At the end of the year, we realized we made 36,000. Shoot, we should have registered for HST, but I didn't. But I better register now because I'm still on the same trajectory for year three, to make 35,000, 36,000. But if you forget, let's say you didn't even file your taxes, you don't even know your numbers, and then in year two you make 40,000, the government will catch on and say, hey, you owe us the HST on the 40, and then you owe us the HST on the 36. Then we tell the government, well, it's not on the 36, it's on the 6, and they say, fine, give us the 6, but we want the HST on the 40 and the 6. And then you're responsible for that. And if you didn't collect it, it's been a year, good luck trying to get it from your customers. Right? They're not going to come back to you and be like, yeah, here's your money. So you do have to watch you're tracking your income as it comes in through Fedora. That's the easy side. That should be the side that everyone's just like, cool, Fedora says I made this much, put it in Excel, $800, and they just have a running total until it sums to 30,000. So the individual taxes, if you have to worry about your personal taxes, you're going to call the general inquiries line for the CRA, for the Canada Revenue Agency. You're talking about anything business related. Business related would just be sales tax for most of you anyway. You're calling the general line for the CRA business department, both of which are found online. And that's where you would register. To get an HST number, literally is a 5-minute phone call. You call them up, they ask you a few questions, you answer those, and then they give you a number on the spot. You write it down, you start invoicing out with HST. Super fast. Even if you're like, oh, I'm at 30,000, I need to issue this invoice next week, call them up right now. It doesn't matter. I'm 1 minute.
Okay, so let's say you had a job,
Yes.
and then you started doing Fedora, and then you go back to doing a different job,
Yeah.
and let's say for the whole year you made, I don't know, let's say great number of 60,000.
Yeah.
Did I
It's
need to
HST.
collect the
No.
HST on the 30,000?
No. So the sales tax is a requirement for the self-employed portion of your income. You can make 100K somewhere and 20K with Fedora and still not charge HST because you only made 20K extra in the business side of things. Yeah, has nothing to do with employment, bank interest, stock sales, whatever, right? Doesn't matter.
When you're making over 30K, it's like you're a store. When you go to the store and you buy the thing and they charge you the tax, now you're the person charging them the tax for you to deliver their food.
You need to invoice them for it.
Fedora.
You have to bill Fedora, like you're the boss.
And they have
You're
to pay me in my
They
account,
gotta
and then I
check.
pay the government.
Then you pay the
Yeah.
government. You contact the CRA first.
Uh-huh.
You say, I want to register for the sales tax program.
And then they give me some kind
And
of
then they give you a 9-digit business number,
Uh-huh.
RT0001, and then you take that number, you put it on your invoices, and then you send that to Uber Eats or Fedora and say, this is the HST you owe me, here's my HST number to prove I'm part of the program to collect. The HST that you're collecting, so the HST that I collect from my clients, that's not my money. Let's say my bill is $100 plus HST, 13%. My money is $100 minus the government's income tax. That's different. If I spend $100, I pay the government nothing. I made $100, I spent it, I give them nothing. But I still have to give them the $13, right? So I'm collecting $13 extra from my clients as HST. As a business, we are not, and you guys are businesses, self-employed business. As a business, you guys are not required to pay HST. HST is for individuals. You collect $13 in HST, but you spent your cell phone bill, $50, $7 right there, $6.50 right there in HST. What you give the government is what you collected, 13, minus the amount you spent on business expenses of HST, so the 6.5. The difference, which happens to be 6.5, is what you give the government. Okay, you collected 13, you gave some away, whatever's left over, you give to the government. If whatever is left over is negative, which is rare, but there are cases for it, then they give you money back. I've had clients give HST refunds plenty of times. You will go through a review process in order to get it, but you will get it. But that's HST. In minus out is how you calculate what you owe for HST. So if you are unfortunate enough to make enough money to charge HST, when you are tracking your expenses, whether you're using an app or Excel or whatnot, you're going to be showing your subtotal, your HST, your total including HST, but that side doesn't matter because if you collect HST, you need your HST portion of your receipts separated out from your subtotals because those numbers go on your HST filing, which is outside of income tax. Your subtotals go on your income tax filing. If you do not collect HST, the total of both goes on your income tax filing. Let's say you're full-time writing and you collect HST from Fedora, and so you've collected, I don't know, $1,000, right? But you paid your cell phone bill, and you needed your cell phone bill for work. Your cell phone bill for the year is, I don't know, $700. You spent HST on your cell phone, let's say it's $200. You collected 1,000, you subtract 200, you give the government 800, right?
You keep track of how much HST you paid on like everything?
On business-related expenses. Whatever you're going to claim on your income tax is claimable on your HST, right? But it has to be the HST. So if you're part of the HST program, your Excel file is going to be subtotal, HST, and total. Because if you're part of the program, you want HST outside of your income tax. 2 separate filings. Okay? Every year you're going to be doing 2 filings if you're part of HST. Otherwise, if you don't even have to worry about it, you only do 1. Are collecting it. If you're collecting it. Because if you're not collecting it, they're not going to let you deduct it. So the HST, if you don't collect it, it's not as though you have to separate the HST from your sub-cost. The total goes into your income tax. It's only once you're part of the program that you have to start separating the subtotal from the HST for the HST calculation. So if you have 15K from Fedora and you do 15K from Uber Eats or DoorDash or anybody else, the sum of your income is 30,000.
Who do you charge it to?
Everybody.
Where it comes from.
After you hit 30,000, you charge it to everybody.
But what if one company's like, oh, you only did like 5,000 with us?
And you're like, that doesn't matter. You don't know the rest of my business.
Oh wow.
The rest of my life, maybe I made it 100,000 now.
So they're still on the.
Everyone's on the hook for HST.
Laws around it, like what's the period? Like we're getting paid every week.
Yeah.
Should we be submitting a bill
Every week.
like before we get? So week 1 you make your money.
Yeah.
Week 2 they pay you for week 1.
One's HST.
So.
As long as you're collecting it, I mean,
like, should we be billing them before we get our pay?
No, because you won't necessarily know your numbers.
Okay, so how it would be essentially is like, say I made 800 the first week.
Yeah.
Once they send me that invoice, I'll say to them, okay, you need to give me 13% of
Of
800.
the 800 as well. So
Okay.
give it to them in a separate check. Then you take that money and you set it aside and you give it to the government later.
So that's only if you're expecting to make over 30.
That's only if you have made over 30 or you've pre-registered for the HST program. If you haven't, then you don't have to worry about it. You're a Canadian business, Canadian individual, selling product or service to another Canadian business because Foodora has physical presence here. They're therefore Canadian. Therefore, they are subject to be paying HST to the people they're contracting. So they legally have to give you HST. If they don't, you keep arguing it. Like Uber Eats, for example, you keep arguing it. And then, I don't know. At the end of the day, the onus, the CRA, they don't give a crap. They will say, this is you. You were supposed to collect it. You didn't collect it. Give us our money anyway. If they don't pay you, you don't collect, you're on the hook for that money. Personally.
The fact that Foodora ostensibly charges HST on the service of having their food delivered does not liberate us from the
No, so Foodora is its business, right? And the restaurant's its business, and you're a business. So, and the customer calls Foodora and says, I want this food delivered to my house, right? So Foodora is going to say, okay, no problem. Restaurant, make this food. Restaurant's going to say, no problem. Here's HST. Foodора's going to say, no problem. To the client, here's your bill, including HST. And then the rider usually doesn't charge HST. But now you're going to be charging HST. So it's going to come from the restaurant to Foodora, and then Foodora to you, and then you to the government. If in the following year you only make 20, and then in year 3 you're only going to make 10, you can't call the CRA and say, look, I'm not making any money, take me out of the program. But once you're in the program, you're doing it until you're out of the program. If that's the situation where you had an HST account and then you stopped using it because you've gotten a regular job and they still harassed you, sending you letters saying, hey, file your HST, file your HST, those are all just zeros. You literally just go online, you file zeros, then you call them after the zeros have been filed and say, look, now close it. Because clearly they didn't before, because every time you talk to the CRA, you have to hang up, call them back, and talk to them again. Okay? That's just the way it works. One guy tells you something and the other person tells you something different. That's just how it is. Okay? They write the rules, they don't know the rules. Keep in mind that when you call general inquiries, whether it's the business general inquiries or the regular inquiry line, they're regular people like us. They didn't write the rules just because they work for the man. They literally got out of school, applied for a job, and now work here.
Yeah.
That's basically it. Either way, whether you are working with a professional or you're doing it yourself, you're still going to need to get organized the same way. Or if you haven't done them, you're going to want to get organized to get up to date. So all that really matters is your total income. That's the easy part. That's the part that these Foodora reports should tell you. Or if you're not working with just Foodora, you just add up all the bank deposits or anything like that that you know came from outside sources for income you earned, not from a family member or a friend transferring you money for just some random day. The only thing that is not income in Canada, lottery winnings or gambling winnings in general, and gifts. Okay? Gifts, that's it. Everything else, all those
Tips, gifts.
tips aren't gifts. Tips are you did a service and they said thank you, here you go. Right? Now, I'm sure that could be argued. Absolutely could be argued. But you earned that gift in the course of business. You weren't just walking down the street and someone said, hey man, you want $5? Right? It doesn't happen much. But it happens. That's why homeless people don't actually have to report that sort of income because they didn't do anything for it. I couldn't imagine if I had a homeless person client, I'd be like, well, let's just file your taxes to zero. You didn't make any money through employment. It was all through charity.
So if you got a cash tip, you wouldn't really want to do that because that's just going to boost your income.
This goes back to the problem with cash being hard to track, right? I mean, it's hard for us to track cash. I mean, I track my cash as best I can, but now we're online, so I don't have to, thankfully, because it's all debit and credit payments. But yeah, cash is just notoriously difficult. You get some money, sweet, on to the next job. You forget about it. You want to buy a coffee, you pull it out, and you give us coffee. All of a sudden, you take all your money out, and you're like, how much are my tips? Well, you've already spent money on coffee or food or whatever, so you don't actually know how much your tips are, right? So tips are a harder one to track. That being said, tips are considered income. Whether you're a server or you're a rider, or in some cases I get tips, and in that case I do put it under my income too, which is rare. I still don't understand tips, but we still have to report it as taxable income. Hypothetically, do people do it?
Yeah.
No.
Sorry,
No one does.
I slightly missed.
No one does.
I worked as like a bartender for years.
Exactly.
I
Never.
never claim my tips.
And that makes sense back in the day. Now, with my server clients, we are suggesting a reasonable number because again, it is hard to track. So we take a percentage of salary.
So what you're suggesting is you don't want to lie. You want to.
You don't want to lie. You want to be honest.
Suggest that you earn something in tips, but you don't have to.
Yeah, you just don't know, right? I mean, I've had a server client who bought a condo in Toronto, and I'm like, your income's $23,000.
There you go.
I don't know how you did it.
There you go.
Maybe you're just really good at your job.
No,
Maybe someone gave you a free
place.
place. TFSAs are a different situation. They have nothing to do with self-employed or employed or anything like that. TFSAs are great in and of themselves. Tax-free savings account is a misnomer that the rich put on the rest of us because you can actually create a brokerage account. And I've had clients who have created trading accounts. So what I mean is a stock purchasing account through Quest Trade or Scotia or whomever you want to use, right? And he invested in the 420 stocks 2 years ago. He netted out a tax-free 80K. Wow. 80K gain because he understood the system is not a tax-free savings account, tax-free account. So whatever you gain, whether it's a high interest 3% or whether it's 80 grand worth of stock sales, it's still tax-free as long as you do not over-contribute beyond your limit. Gains don't matter. And as long as you're not day trading. Like day trading is like, try to trade less than like, I don't know, twice a week kind of idea, right? Buy your stock, sit on it for a month, sell it, or do whatever, right? But if you're up there every day, that's day trading, you make enough money and the CRA reviews your TFSA account because they get that data too annually. They'll say, oh, you made 100 grand. Let's see your trading history. You were on it every day. That's a job. You don't get this tax-free. This is considered employment income. Give us 30%, right? So they're sneaky that way. They'll do whatever they can to get money out of people. So just make sure you're playing within their rules and they'll leave you alone.
What's this threshold and how much is the increase every year?
The TFSA?
Yeah.
So the TFSA started in 2009, started at $5,000 a year. 2009 and 10 were 5,000. I think 11 was 55. 12 was 10 for 1 year, thanks to Harper, and then it went back down to 55. Now we're at 6. I think now 2019 we get an extra 6 grand worth of space. So your TFSA space is tracked by the CRA, and if you file your taxes, it'll be on your notice of assessments every year or online on your CRA My Account, and it'll tell you there as well what your TFSA limit, contribution limit is. But you have to be filing your taxes. That's the trick.
I'm paid cash for my job, and I've been doing it since August of 2017, and I'm still doing it. Only this year did I keep, since January, have I kept track of what I've made. I was talking to a tax preparer, and they said, I went to a tax thing, and I didn't get to stay, but I asked them, what do I report? I don't have anything to report. She says, kind of gauge some figure, and I'm not even sure where to start.
So cash is hard to track for everyone, ourselves included, right? I mean, if we take it and if we're not organized ahead of time enough, what are we going to do, right? We didn't put it in the bank, so there's literally no paper trail. What do I tell my cash clients? I mean,
keep receipts.
Well, I mean, after the fact, I'm talking about a whole year and a half.
Before, right?
I've tracked everything now in January, but
honestly, it's your best guess. Because if the CRA were to say, so CRA is not going to bother people about proving their income unless they think it's too low, right? Which is rare. They usually look at expenses because that's what everyone always tries to do, lower their income through expenses. So if you tell them, if you're like, all right, I don't really know what the cash value was in 2017, but I was living, so you know your rent got paid, you know your cell phone got paid, you know you ate something. You got to add all that stuff up, the living costs, and say, all right, it was about. Obviously, I had to make at least 20,000, 15,000, so maybe it was more. Let's add another 5 or 6 for expenditures, 500 a month for extra costs. If you felt you were living super tight, you're not going to be adding too much money. But if you're living super lush and you're like, what's going on, traveling all the time, then you and I both know, let's start reporting 30, 40,000. But if you still report 20 to the government, they're not going to say otherwise.
Based on my expenses then.
I would start with your expenses to try and give you a good idea. If you ended up going to a ton of debt, maybe you only made $10,000 because you went into debt for the remaining life balance, right? So I would start with your expenses, figure out what those would be on average for that year, and then say, all right, well, I didn't go into debt, and so I obviously did get to go out with some friends sometimes, and so I did spend some extra money, disposable income. So let's top it up a little bit more, right? And then report that figure. The other part is the tricky side, and that's the expense side. There you're going to have multiple different expenses and a lot of little receipts, right? You come here to get your tire fixed, that's 20, 30 bucks. You go get a meal out, that's another 10 bucks, right? That sort of stuff is going to add up throughout the entire year that you have to then categorize, sum up, and then present to your accountant or the tax software. Regardless of whether it's a meal or a general expense, a bike or a tire repair or whatever, okay? The itemized receipt is what the CRA would always be looking for if they asked. Okay, the CRA has gone electronic in the last 7 years, and so they're not actually taking on any paper from anyone. I'm not even allowed to, as a professional, allowed to file paper taxes. If I file more than 10 paper taxes a year, they're going to fine me for it, right? They don't want paper, and that's okay because neither do I. So you're responsible for maintaining your receipts, specifically the itemized receipts, okay? That doesn't mean you shouldn't make a legitimate claim for some of your costs. Go through your bank and credit card statements, pick out the ones you know, like a bike shop like this, you're not going to buy anything else here but equipment and gear. So, mark those ones down. Your cell phone is always going to be an easy one. No one's really going to be stressing about that. And those ones are hosted online anyway, so you could always get those bigger ones. But don't sell yourself short just because you didn't keep the receipt last year because you didn't know. Okay, just do better every year. No one's perfect year one. Usually it takes my clients who are self-employed, whether they're riders or just other industries, usually takes about 3 years to really get comfortable with what they're tracking and saving. So every year is a bettering of themselves. Yeah.
There's a great free service called Evernote.
Oh yeah.
So you know it. There's an app. You snap a picture of every receipt right at the moment. Don't wait till you get home. Just take a picture right there.
And then beyond that, there's like expense software that you can actually buy for like $4 for the entire year, and it takes it that step further and just organizes it for you. And
exactly. There are many different software options out there. Thanks to mobile technology and the iPhone back in the day, there are things like Expensify, Conquer. Most of these were developed for businesses, for employees to record expenses, but it's the same concept. It will sort your expenses by general category, whatever category you say. It'll track the amount, and in some cases, you take that photo and save it within it. Evernote is great. Dropbox works too. Google Drive, Google Photos, whatever. It's just there are receipt sorting specific apps out there to help you, right? That don't have to cost money. Some of them are free. The entry-level ones are free, and they're generally good enough. You're not going to have a ton of expenses anyway. Alternatively, you use Excel once a week, enter in whatever small receipts you happen to have.
paid ones don't fail though.
The paid ones fail less. They fail less. I'm not going to endorse anybody of not
like
failing.
$4 just
Yeah,
to
yeah.
like have your stuff in the cloud.
Exactly, and be able to produce a nice
pretty good
Excel
insurance,
report at the
yeah.
end of the day, things like that. Exactly. So there are definitely lots of opportunities and options out there. So if you do run into a problem, I know this is how I run my business. If I run into an issue where I need, I don't know, how do I sort my receipts, right? You go online and you Google an app and you will have like 50 different ones. There are so many options, whether they're paid or free. So there is a solution to everyone's problems. There isn't, I mean, unless you're trying to cure disease, we're not doing anything special. If you buy it online through your credit card, unless you have a US credit card, it's going to come off. Your credit card is Canadian.
You just put
Fund
that
that.
in. Oh, okay. Fair enough.
Yeah. If for some reason you are holding a US account or a foreign currency account that you're using to buy things through, that's okay too. You would then be tracking your expenses, but you'd have to add like I don't know, if you're doing Excel, you'd have to add a separate column for that different currency that says, okay, this bike expense was in USD, and I didn't get the conversion because I paid US dollars for it. I don't know what the conversion is. We are allowed to take the Bank of Canada average for the year from their website and just do the conversion ourselves. So if it costs you, the item costs you $20 and the taxes cost you another 20, that's what happens. Your item's $40, your expense is $40, right? Any costs associated with getting you that item that you need is going to qualify. For the most part, I wouldn't recommend using, if we were talking back taxes or like 2018, you didn't save anything, use those, that's fine. But if you send in a bank statement and say, here's my Walmart purchase, I bought some tires, they're going to say, sure you did, right? They don't know. If you're driving a car and you go to Shell and you say, here's my gas receipt, they're going to say, okay, that's fine. What does Shell sell except Gatorade, cigarettes, and gas, right? So they're probably going to be okay with that. So we have to be reasonable. You think about it the other way. If someone was owing you money, what kind of proof would you need to be like, okay, I'll accept this person's claim to only give me this amount of money? So expenses are different for everybody, right? Even if you're all in the same industry, it's still different because some people are, I don't know, they can repair something, whereas the other person has to pay services to get it repaired, for example. So when it comes to what is a business expense, it literally can be an extremely long list. If you can justify that you made this purchase to better your business life, it should qualify. That's basically the jargon that the government gives us. So a lot of tax is interpretation, where you can say, for example, is this a reasonable business expense, right? Let's say I charge for this to whomever, right? Would this be considered a legitimate business expense? Yes, but maybe some people would think it isn't, and maybe the CRA doesn't think it is. So maybe they'd argue against it. So even though it's written, legitimate business expenses can qualify. If that's what it's written, who's to say what's legitimate? So their policies can be open to interpretation when talking to different people. For meals, there is for couriers. So because you guys are legit couriers, there is that meals allowance of $34 for every 8-hour shift, something like that. It gets whittled down to the 17, right?
Yeah, 17 or 17.
So it starts at 34, 35, but it starts there, right? But then it gets whittled down because the 50% allocation. So it does get back down to that 17 mark. It just starts at that 34 mark, but it's for every 8-hour shift.
So you're allowed to claim $17.50 for every 8-hour shift.
Yeah, you gross it up on the tax files, and then the system or the person you're working with will automatically take the 50% allocation, and that's the $17.50.
So we should be claiming 34 so that we get.
So that you get the allocation broken down correctly. That's right. That's right. It's between.
I was always told you were supposed to put the regular amount down, but call it fuel rather than meals.
That is
Because
a
it is
different
couriers.
tactic. Yeah, exactly. So that would be a different tactic. It is written that bike couriers, specifically bike couriers, not necessarily car couriers.
Walkers do.
Yeah. Oh, walkers. Okay, but not cars. The point for the most part, right? Between bike couriers, walk couriers, and long haul truckers, they get different treatments than everybody else. No, we've just been summing up 8 hours for the average.
So like I could go like just
Just sum up all your
yearly
hours for
total
the
and
year.
divide by 8.
That's what we've been doing.
Okay.
Yeah, that's how we've been treating it.
I notice if we start our shift early, like let's say we start half an hour early, but we don't get our first delivery until 2 minutes when our shift starts. That's when they start the clock.
That's
even
from
though
what
I'm
you can
on
prove.
work.
Yeah, that's from what you can prove. And you can't prove the half hour, right? So it would be the government. Unfortunately, the government leans heavily on businesses and their information as gold versus our word, even though they're lying most of the time, which in this case they are, right? They just don't know. Bicycle couriers get a fixed allowance, so they don't actually have to monitor their spending unless
Don't need receipts for it.
yeah, exactly. It's just a straight calculation, unless you feel that your food spending is higher than the allowance. So don't be afraid of the government in the sense that they've written these rules. They don't know these rules that they've written. Okay? They have no idea what they've written. So you do have to communicate to them, well, guys, wait a minute, I'm allowed this deduction. Sometimes they won't. So that's entirely up to the individual. When I started my business, I was part-time self-employed, full-time school, full-time regular job. I obviously didn't take 100% of my phone at those early years. But as soon as I became full-time self-employed, that was my only lifeline to clients, and so I did record 100%. So if you're a full-time rider, I would push it. I would claim that 100%. I know most people tend to be on wind anyway. Oh no, was it Freedom now? Freedom or one of those low-cost ones anyway.
Yeah.
So I mean, you're talking $45, $50 a month times 12, $600 worth of cell phone cost. That's peanuts. I mean, I pay way more than that, unfortunately. Exactly, right? So I would, if you're full-time Fedora, put the full amount. If you're part-time Fedora, definitely be considering anywhere, literally it could be anywhere from 1% to 100%, right? It comes down to comfort level. Taxes aren't just about the numbers. Taxes are about your comfort level and how you feel about it. Like if you felt uncomfortable, I've had clients, I'd be like, look, all right, cell phone, let's put down 100%. They're like, I don't feel it's right. Like, okay, cool. I'm not gonna force that on someone. You're gonna pay a little bit more in taxes. It's minor because we're talking dollars at this point, not thousands and thousands of dollars. You're gonna pay a little bit more in taxes, but you're gonna be able to sleep at night. That's what counts. If the CRA wants to review it, they're gonna wanna see some numbers. So what I say is, as a Fedora rider, data, you obviously need that. The talk, not as much, but unfortunately in Canada, data's expensive anyway, so that's like most of your bill. So I would definitely, if you're gonna go for a minimum, expense the data portion, right? Because And that should be somewhat separate on the bill because you just look at a basic talk plan, $35. My plan, $100. The difference, data, right? And so I would put that down as a minimum, especially if you're full-time. If you're full-time, I would go even higher to like 80%. But if you feel uncomfortable, anything less than that's fine. If you're part-time, you're in school, you're doing this on occasion, yeah, you might do something like 30%. Again, it comes down to what you feel you could prove if asked. Okay? It's not as though you're going to be asked, but if you're asked. In my opinion, when I say full-time, so it's not the government standard of full-time, because everyone has different. CRA, Ontario, whatever.
Yeah.
My idea of full-time is this is all you do. This is it.
Okay.
It's not the hours.
Okay.
It's you don't have a 9 to 5, right? It's you don't have a 5 to 9 in the evening. Like you don't have another job. Because if you have another job, you're obviously not available to work here. And you're not putting in all your effort into this. So you would take a lesser percentage at that point. But if this is all you do and you make $25,000 a year, and that's it, even though it feels part-time because maybe you have physical constraints, so you can't do this, but you can't do regular work either. Cool. That's still full-time. It is your only gig. So then we would prorate accordingly. If you're full-time, I definitely would. If you're part-time, again, a portion would make sense because maybe you're going from an older flip phone to a smartphone, and you're only going to a smartphone because of the writing and the apps and all that stuff. In that case, sure, why not? I gotta buy used things. All my laptops for my team members are used. I'm not gonna go buy new laptops for anybody. My laptop's used too. So did I get a receipt from those people? No. Do I do have the email chain that says, hey, I'll meet you here. This is the price. All right, I'll be there to pick it up. Yes. Do I have the actual product? Yes. That should be sufficient enough. And if they decide that's not, well, let's keep going until it is. So I've had clients who will write up their own receipt. Tell the individual, here, can you sign this saying you sold me a phone or a computer or a laptop desk or whatever. They shouldn't have an issue with that because selling personal property is not taxable. That income is not income. That's why garage sales are so great. If that's your business, it's not your business, but if you make $5,000 after selling all your stuff, you're not paying tax on it. Because if you did file correctly, your purchase price would have been more than the cost of the actual sale price. So you're at a loss. The government understands it's called personal property. So they shouldn't have an issue signing off on a receipt saying they sold it to you. Right? And that way you also know it's not stolen. One of the laptops I bought was stolen. Opened it up, turned it on, started working, got a call from the RCMP saying, I see you in the camera, and we had to take it back.
What?
It's called low jack. Low jack your computers. All my computers are low jack. So
Cheap.
if it's a cheap bike, like a couple $100, I will definitely tuck it in a supply somewhere, and the
Right,
government's
and
not
then
going to find out.
there's other guys like me who spend like $7,000 on their
And
bike.
for those ones, we would depreciate over time.
Right.
So you would recognize that as a capital asset.
Which is why
You
they
take a
like.
percentage over time.
Yeah.
So that's also built into the system. It's called CCA, capital asset.
What's the percentage that you can take?
So that's dependent on the bike. So the government sets up all this stuff. They have a long, long list of CCA classes. For bikes, I would assume it would fall under general equipment, so 20%. But you would want to double check that, of course.
So you can claim 100% for bikes.
If it's cheap, I would because it's under $500.
$1,200. Let's say I got my bike for $1,200.
$1,200 is borderline. It's kind of like a computer, right? We're not supposed to expense a computer either, right? Even for businesses, because they're assets. So it's not an expense. Like that nice Apple computer over there probably costs $2,500 or more. We would not write that off in one line item saying computer $2,500. We would say we have an asset with a value of $2,500. Now let's take a percentage of that, whatever percentage the government allocates, and they tell us already. And for computers, that would be 50%. So for year one, we take 50% of the $2,500. That'll be your expense. Year two, you take 50% of what's left. That'll be your next year's expense until it's gone or depreciated to zero or sold. So same thing with a bike. For the most part, you would be depreciating that just like a car. So the value of your car, the cost of your car, is not an expense. But a portion of it obviously is because it depreciates over time through wear and tear. So you will say, for example, if I had a client with a car, I'll say, how much was your car last year worth? Let's say it's year one for business for them, and they're just coming in with a used car they already have. So well, what would you list it on Kijiji? What do you think you'd get it for? Right? Say, all right, $6,000. Okay, cool. So we're going to put the valuation of the car at $6,000, and then it's going to take 30% because that's the depreciation schedule of the car. So you're going to have, what, $2,000 worth of depreciation. But you've only driven for 40% business, so then we're only going to get 40% of that $2,000, right? And then next year we'll do it all over again. So it'd be the same thing with a bike or any large asset. Photographers, any large camera equipment, sure, the camera itself is not going to be an expense. In some cases, if you buy multiple pieces of equipment, 5 tripods, 5 of those light things, that stuff's not going to be an expense because it's now an asset grouping. It's a class. So we all have to capitalize it and take a percentage. So it's really tough for cash flow. You spend $1,200 on a bike, your income, let's say, was $1,200. You spend $1,200, your cash is 0. Tax-wise, maybe they're only going to give you 20% of that $1,200 initially. So now you have what? Let's just say $200 worth of an expense. Now your taxable income is $1,000, and they want tax on that $1,000. But you physically don't have $1,000. It's tied up in this asset. That's the tricky part about assets. The initial build of the bike, probably not. You would probably consider that now a new asset that you've built that has a value. Any new parts after that, once you've got the basics of a bike down, and then you're like, oh, I want a better tire. Cool. That swap out will count. Sure, we'll push that through. But if it starts to get pretty high,
so if I was using a crappy bike and then I built a new bike, can't I essentially say that I choose to put new parts onto my old bike?
And eventually,
yes, you have a new bike.
Yes and no. Yes and no. So it's similar with it's similar with the concept of repairs versus improvements, right? So if you punch a hole in a wall and fix it, that's a repair. If you tear down this wall and put up another one, that's an improvement, that you've extended the longevity of its life. Therefore, that's capital in nature. So that's an asset. So if you're gonna fix a busted tire, cool. If you're gonna change that cranker out or whatever to something else, you could be improving that, increasing its value even. So you would capitalize that. If your bike was an asset, right, an expensive bike, then that asset is therefore gone. Therefore, the remaining value of that asset becomes an expense because you've disposed of that asset, right? If the bike was a low purchase bike, $500, and you've already expensed it amongst your other supplies, and you've already expensed it, don't even worry about it for tax.
What is more?
Yeah, if you had that depreciable asset, if you were, let's say it's worth $3,000, and you already get $1,000 of the value has gone down over the last couple of years. Now it's worth $2,000, right? If you sell it, you're supposed to say, okay, my loss is the original price, $2,000, the remaining price, sorry, minus the sale price, $500. So you've lost $1,500 on the sale of your asset. So you report $1,500 as your expense. But if it's stolen, your sale price is 0, and therefore you expense the full remaining value of your bike.
You have to buy a whole new bike.
And then that'll start the new asset class at that point. You'll keep reporting that down. So in that year it's stolen, unfortunately, you'll have a disposition of the remaining value, and then you'll have additional depreciation of the new value of the new bicycle.
Do I have to include like a police report that proves that my bike was stolen?
No, you're going to want to keep that stuff, but you could have given it away, it could have broke and just non-repairable, like total write-off. The government, the CRA is not going to look that closely into it right away. And if they did, they're probably going to look at other things for you too. Like, all of your other receipts.
So I can report that it was stolen and then...
You're not going to report that on the taxes. But if they look and are like, okay, well, how did you just sell this asset for nothing or get rid of this asset for nothing? It was so expensive. Then you're going to be like, well, I didn't. It was stolen. That's my proof of sale, right? But they're not going to ask for that stuff. And there's no way on your taxes. There is no place on your tax forms to put any sort of detailed information about what you do. Okay? It's very vague, which is fine. Yeah. So just tell them the numbers, and if they want more information at that point, they will reach out to you directly by phone or letter, and ask for it at that point.
Let's say you have an electrically assisted device, and the battery has only so many charge cycles, like 500. At what point do you say, like, well, 20% doesn't really account for over the year, because that battery, which probably costs 70% of that bike, depletes after 6 months. So the value of that bike is not 20%. The battery's gone. Yeah. It's worthless, and now I not only have that as a loss, but I also have to buy another battery. So that's a repair.
So those batteries are repairs.
But what about the original cost and depreciation on the actual battery?
Like how much is the bike?
2,600.
Yeah, and how much are the batteries?
Approximately 1,500.
Yeah, so then so you would probably depreciate.
So for $4,000, you could build a bike. You could ride 100 kilometers.
Yeah, but you gotta ride it.
You gotta physically ride it.
It's not a bicycle. It's an electric unicycle.
Oh, sick.
So the cost is all battery.
that's
Yeah,
part of the
that's a
interpretation
whole
aspect,
other
right?
little-
Where as soon as you start replacing the
Yeah.
batteries, that's just repairing. Like it's like replacing a
Because
cell phone battery. It's just it goes out faster.
Electric.
So you'd probably say, if you really want to be above board, you could probably say original value minus battery value, bike cost,
Yeah.
right?
Exactly.
And then depreciate that, and then just the rest of it, which is the original battery, expense that, and then every time you get a battery, expense that. Because like you said, they only last 6 months.
Yeah, because the motherboard's like $170. The
Yeah.
frame is like 200. The
Exactly.
wheel is nothing.
Exactly,
The battery
right?
is where it's at.
So I mean, at the end of the day, depending on what your income was, again, everything is individualized. You may even just be like, no, it sounds actually like just a full expense. Throw it all under there, right? And not even depreciate anything. We're talking depreciation. So when it comes to depreciation and assets, whether we're talking office equipment like computers, we're talking physical equipment like bicycles.
Kind of like its resale value.
Pardon?
It's linked to its resale
Yeah,
value.
yeah, to some degree, right? So if something should be an asset, the government says if it's over $500 and it has value beyond 12 months, it should be classified as an asset, right? That's obviously a little bit extreme because $500 is nothing these days, unfortunately. Because you buy a $500 laptop, $700 laptop, that's a terrible laptop. But if, in my opinion, I say $1,000. I will expense anything approximately up to $1,000 before I decide to capitalize. They don't do clothing.
They don't do clothing. So
No.
gear for the winter.
So that's different, and I stand very strongly behind that. Clothing, yes. This shirt, $10 at H&M 5 years ago. I can't write that off, right? I don't care how I'm supposed to look. It doesn't matter, right? You guys riding in the winter wearing gloves, whether they're heated gloves, nice fancy ones, or just regular gloves, to me that's safety. Safety gear will always qualify. Yes, equipment will always qualify. That's the sort of interpretation, but that's specific to each industry, right? Like for example, for all you guys, makeup doesn't count. For a makeup artist, makeup is their supply, right?
Do we tell them specifically that we work the winters? Because CRA won't know this.
No. So the CRA doesn't know anything.
Yeah,
They know nothing, which is where we want to keep them for the most part. We only want to tell them what we want them to know. Bags count. I know there's like what, $50 for you guys. I would put that down as a business expense for sure, as a supply, because sure everyone should be wearing sunscreen, but
Now we're wearing it.
But you guys are, you guys are very specific. Like you're, it's like
sunscreen.
construction, right? It's very specific.
Spends
Yeah.
all of it. We don't make that much money.
Exactly,
anyway.
right?
We don't care.
The government understands that everyone has to go to work. Okay, so even as a self-employed person, if I had an office, I wanted to pay those prices. My drive from my apartment to my office is not a business expense because everyone's got to go into an office, right? My drive from my office to a client's site and then back is a business expense because that's extra driving. So, no. Traditionally, your initial cost to get from your place to where you're going to start working, even as a self-employed person, unless you work multiple sites, but if you're traditionally always going to this one place over and over again, does not count as travel. That being said, it's like $5, like, so we throw it in. For the most part, it's not a ton, right? Like it's not enough that's going to hurt the CRA, but it's enough that's going to help you. Like a $50 savings to us is fantastic. We can lower our taxes even by $50. We're feeling better. Is the government going to sweat over $50? Not likely. So when someone says, "Oh, I have my transit passes or my token purchases," they were like $400 for the year. They're in my travel costs along with my bike repairs, whatever. Cool. Not a ton of money. It's going to save you an extra 20. The government's not going to sweat. That's what I mean. Where I kind of, but no. Technically, no. I wouldn't recommend it. But some people do it. We don't do it. Okay, so when it comes to bikes, you're obviously going to be claiming 100%. That is your tool, right? When it comes to cars, and it's similar to home office where we would take a percentage. So for those who are driving cars or motorcycles, you're going to be wanting to track your business kilometers as best you can, okay? As best you can. There are applications for it. Again, there's a solution to pretty much every problem we have at this level. So I used to use tracking apps. They will spit out an Excel report that has all this data laid out. Starting odometer, ending odometer, locations where you started and ended, and then you can put notes in there if you want to, and it spits out a nice Excel report. And if the CRA wanted to ask, they will say, "Oh, send us your receipts, but also send us that report." If you send in the receipts with an explanation saying, "Oh, I think I drove this much," they're just going to take it out of the envelope, put it back in the envelope, send it back with a letter that says you're not getting anything. Okay? They don't want to do any work at all. So you have to do it for them first. You have to give them everything they need that they which they will deny the first time, so you have to expect it and then send it in again the second time. And I think Fedora, well, at least for riders, they have like a kilometer count or something like that.
Yeah, stats.
Yeah, they have some stats, but they're not that great, right?
Yeah, it's only for the drop or something.
Yeah.
Isn't it?
Yeah,
Not
so
the
it's only for a
pickup.
short distance. So you could go by that and then tack on like 20% or whatever. But it's not. But it is a percentage. So for tax, we record on the files or with the person you're working with the totals. This is my total car insurance for the year. This is my total fuel for the year, not just my business fuel. The total fuel for the year.
So you claim your total fuel.
You report the total fuel,
Report, okay.
right? You report the total maintenance, total insurance. You report it all. Then we say, okay, well, how much driving did you do for the whole year? Starting odometer minus ending odometer. Okay, let's say you do 15,000 K. Okay, cool. We have 15,000. We have all the totals. Of that 15, what percent is business? Let's say 5,000, 30%. The system will then take 30% of everything. Okay? We don't want anyone to be mathematicians beyond addition. Okay? I don't know math in my life. Okay? I can do addition pretty well. But that's about it. I use a computer for everything else. Okay? Because we are inputters. We want to make sure the inputs that we're giving the system are of quality, assuming we trust that system, so that the outputs are of equal quality. So that's why all you have to worry about is summing up income, summing up your expense in a general category, not doing any prorations necessarily. Even for the cell phone proration, I still recommend to clients, look, just give us your total and then let us know you want to prorate it. And then we'll have a conversation about at what level, what percentage we're going to prorate that. But we're starting with a full number and dialing it back versus starting with a dialed back number, trying to gross it up and feel confident in that gross up. Okay? Yes. So fines and penalties do not count, right? So if you're late filing your taxes, the extra 5% they charge you for that does not count. But municipal fines do count. I do expense my parking tickets. Last year I got it down to about 5. The year before that I think it was at 20. So definitely parking tickets count. They're the name of the game. That's why you see all these FedEx guys. They have tons of parking tickets on their dash. They just hand them in. Someone deals with it, and it counts as a qualified business expense because it's a municipal fine. Okay, it's not a federal level fine from the government. Yeah, it doesn't matter about. And the same things if you go to like M-Park and they give you one of their bogus little $40 receipts, $40 tickets, and like, I'll pay this or we'll tow your car. You guys are M-Park.
So that's why these FedEx guys have like 10 tickets on.
Yeah, they don't care. It's not their problem.
That's what I don't understand. Like,
the company pays for it. Yeah. Now I don't know why they don't crack down. That's just wasting money to me. But it's part of their job. They have to park in a lot of cases illegally in order to deliver our packages for next day service or whatever you want to do, right? So yeah, they just take it. Most of the time they strike a deal. They have a paralegal or a legal counsel that says, all right, here are all the parking tickets. We'll give you 30% of the total. And the government's like, sure. You can do it too. You can do it too. You can take your parking tickets. I used to do it too when I was a little bit more broke than I am now. You just go and you waste an hour, but you stand up in front of the justice of the peace and you say, all right, I'm guilty for my parking ticket because you can't plead not guilty and they'll nail you twice the fine. And they say, okay, what do you want to pay? I'm like, well, I don't have a lot of money. What can I pay? And they say, all right, we'll give you 30%, 60 days. I say, no problem. Here's $10. And that's it. But you wasted a day and a half.
But what if you fight a ticket and they lower the amount?
Then you only put the lowered amount.
Okay.
Yeah, always only what you pay. Moving violations, that's federal or provincial now, right? Highway Traffic Act, we get it different in each province. Honestly, I wouldn't suggest it, but if your total income was 40 grand and your total expenses were 9, and your red light ticket was $300, yeah, I'm gonna put it in there. You're gonna save a little bit extra money because you already don't have a lot of expenses, right? You're gonna top it up. But again, having that data at hand anyway, regardless of if it's used, gives us the ability to make that discussion, to have that discussion, to say, all right, let's put it in or not.
The apartment looks like a bike shop, but I also sleep there.
That's not uncommon.
Yeah.
Cyclists specifically. Okay, so home office. Traditionally, it has to do with desk jockeys like myself, right? Yeah, I mean, you guys have definitely some paperwork for sure. Especially now after this, hopefully you'll have more paperwork. Unfortunately, just stay more organized. So with riders, with anyone, self-employed, the home office allocation that we tend to go for is anywhere between 5% and 25%. Okay? Now, there are 2 ways to calculate home office. Square footage, how much space is being taken up by the workspace versus the total square footage, or number of dedicated rooms versus the total number of rooms. Okay, so this is how we get to the 25% cap, where if you have a 2-bedroom apartment, you're lucky enough to have that, And one is a dedicated office. You have 2 bedrooms, kitchen, a living room, hallways and bathrooms don't count. So 1 in 4, 25%. That's how we get to the cap. Now, it is unfortunate. I've had a lot of people, some dog groomers and cyclists definitely, where they are using a large portion of their space, and photographers, for income production. The way the government looks at that and says, is this dedicated space? Which means, is it always used for business, or do you tear it down and sit on your couch? So I've had clients say, oh, I'm like, where do you do your desk work? Like, I do it at my kitchen table, I do it at my living room, so I'm using 30% of my place. I'm like, well, I do about 2 hours worth of desk work a day, if that, and then 24 hours in a day, the government's going to think, oh, actually, you probably use your home office 1% of the time, right? I've taken 50% allocations down to 3% very quickly, and then we've settled on 20, right? So be reasonable. If you're renting, I could say you could probably push it to 30, probably, with limited worry. I would personally recommend staying within the 5 to 25 threshold. If you're owning, you don't want to make that too high. If you own your own condo or home, and you start reporting, this is a new thing for the government in the last 3 years, and you start reporting home office expenses, like the space producing an income. When you go to sell that home, there is a high probability now, because the CRA is getting better at tracking, they're not stupid, they're slow, they're getting better at tracking so that when you sell your principal residence, normally, that is tax exempt. You do not pay capital gains taxes when you sell your primary home. But if you were using part of it to earn an income for so long, they'll say, well, wait a minute, you claimed 30% home office for the last 5 years. We've allowed that. We want tax on 30% of that sale. Okay? So home ownership is a tricky one with home office now because they're getting smarter. Renting doesn't matter. You're just going to move anyway. Nobody's going to care. So all that stuff gets built into the home office. So just like car, where you take the totals of everything and then we take a percentage, we prorate it, you're going to take a total of all your home stuff, your total rent insurance, total hydro, utility costs, right? You're going to take all of that stuff by general category, utilities, rent, internet, insurance, right? Take the totals. Then at the end of the year, you have that conversation with the individual or the system you're using, or if you're just carrying it forward from the previous year, another 15%, you'll just carry that forward. But it will do the prorations, okay? You're doing the totals and the summing up. That's it. So yeah, that's property, that's built into property insurance.
So if you own, you claim your mortgage?
Mortgage interest, not mortgage principal.
Mortgage interest,
Any
okay.
expensible ones. Principal is you buying into the asset. It doesn't count. So mortgage interest, property taxes, all utilities, condo fees, maintenance fees, if you're part of the condo board, all that stuff counts. Traveling and doing work while traveling doesn't matter for anybody.
Excuse me?
Working for traveling does.
Just to that point, I think as Fedora guys, we can go to other cities and do Fedora.
No, true. But if you're going to go visit a friend in BC and you pick up some shifts, your original intention was to go visit that friend. You would have done it anyway.
Yep.
Not a business expense. If you're like, Toronto in the winter sucks, I'm going to BC, that travel expense would qualify because you're going for work. And then the rental cost, the living cost, the portion of those would qualify.
Sounds like one of those interpretation things.
It is exactly those interpretation things, yes.
That basically is a prevention by the government from people taking advantage of it. Oh, I'm going to haul ass to BC and they'll pay my plane ticket and I'll do it on the auspices I'm going to work there for a while. So it's basically a prevention on their part, I guess.
Yeah, exactly. And like most people, like for example, I work off of my one laptop. If I travel down to the DR and do some work there, does that qualify? No, it wasn't part of my intention. I don't have any clients down there.
But if you did, it would.
If I did, it would qualify. That's right. So that's the difference. What's the mindset? What are your original intentions for this action? So traveling doesn't traditionally count. Working while traveling doesn't matter. Traveling for work counts. Okay?
So if you want to have a vacation, make sure it's to Vancouver or Montreal.
If that's where you're going to work, absolutely. Make sure before you buy the plane ticket, you start telling people you're going to go work there for a couple weeks.
Clearing yourself for shifts beforehand.
That's right. Yeah. Gym fees, golf fees, yoga passes, all that sort of stuff does not count.
Really?
It's written in the law. Now, that being said, is it open to interpretation? Of course, everything is. So if I have a client who's a personal trainer, their gym membership will qualify as a business deduction because that's their industry. Medical is different. Medical is also not a business expense, but the government has a bait and switch for medical as well that we do. So medical it has its own page, medical forms. You just tell the system or the person you're working with, this is my medical total, physio, chiro, whatever.
Insurance?
So RMT specifically. Insurance, yes. Insurance, not life insurance, but health insurance, yes.
Personal.
Yeah. You write all that stuff off as a medical expense, a medical credit. And so the way medical credits are calculated are, instead of a ceiling for medical, there's a minimum for medical. Okay? That minimum is the lesser of $2,300 or 3% of your taxable income. Which means if someone, basically it works out to if you make about $50K a year or more, taxable income after expenses, your medical threshold is like $2,000, $2,300, which means if your physio costs you $1,000, you're getting no benefit because it's below your threshold. Your physio and all of your medical combined cost you $2,500 and your minimum's $23, you're going to go 25 minus 23, you can get $200. You're not going to get $200 with the benefits. I don't think you're going to get lucky. You're only going to get 20% of that written off your taxes. So for $2,500 medical costs for the year, you're only going to get a tax savings $40. Approximately. Now, if you get your expenses down so it looks like you make no money, $15,000 a year, your medical threshold could be like $700. So that $2,500 can go a lot farther. Okay? But that's the thing about medical. But if you feel like you're spending a lot, it's still worth tracking. For the average employee who has a medical plan, it's not worth tracking at all. A couple extra dollars to prescriptions doesn't matter for anybody. $500 a year. But for you guys, because you have the ability to get your income lower, and therefore that minimum medical threshold lower as well, and you're going to spend more than the average desk jockey is going to spend, start counting it if you feel like it's a lot. Medical expenses in Ontario, we're quite lucky because a lot of these alternative medicine industries are part of this list. They weren't before, but they are now. So like acupuncture, naturopaths, homeopaths, all that stuff counts. Massages do count, but they do have to be from an RMT. Other than that, everyone else is regulated. As long as it's from a regulated medical profession, you're fine. It will qualify as a medical cost.
If someone earns 50%, $50,000, what is a reasonable percentage of that? Like, is 10%, 15% would be an expense?
I mean,
what would make them like really get
the thing about the government is they'll never tell you. So I've had clients where they've had their receipts super well organized in a banker box in their office, in their house, and then it flooded or it burnt down, or they moved and it got lost. So, and they were behind in taxes. We call the CRA and say, hey, okay, so we know what the income is because that's easy to track with the bank, but we know we had costs. What should we do here? And the woman on the phone is like, well, it's okay to put down something reasonable. I said, well, what's reasonable? And she's like, well, reasonable. And I was like, okay, well, we have nothing. And she's like, well, don't put down anything fraudulent. I'm like, well, wait a minute, is reasonable fraudulent or reasonable? Right? Because technically, if you don't have the supporting documentation, that's a form of fraud, right? Because you can't support your claim. So reasonable, honestly, 20% minimum is where you're pretty much going to guarantee. Like I can almost guarantee we can find 10 grand worth of costs for most of them, right? And that's a mix of things like cell phone, internet, home office, some general supplies, meals, and whatnot. But the best way to do it so that it helps you sleep at night knowing that your taxes are done correctly, even if they're pushed a little bit, is just track it. People always look to me like, oh, you're an accountant, you must pay nothing in taxes. I'm like, I pay as little as possible because I track it twice a day, right? If you spent an hour twice a day tracking your costs, you would pay as little as possible too. That's how it works. So you don't really want to worry about reasonable unless you have more costs that are kind of gray, where you don't know if they're legitimate, so you could put them in, but you could leave them out because they're not 100%. That's kind of where you would start to pad your return a little bit if you wanted to. Now, I don't recommend that. That's fraud. It's not an official statement. I don't know where this goes on YouTube, but I'm not saying defraud the government. That's not what we're doing. Just track your receipts. Accuracy is the best. I have clients who make 50K and literally spend 60, and they're like, oh, if I report this high expense, are they going to audit me? I'm like, they may very well audit you. What? Is it legitimate? I say, yes, it is. So why are we afraid to report what's legitimate when we become very successful, we're going to be paying a ton in taxes anyway? Start filling out your tax forms for the self-employed side. So you're going to be filling out the T2125 form. And that's just self-employment forms. On there, it does say what is your product or service, and then what's your job. But on there, you say what your product service is and gives you it's an industry code. That's more for Stats Canada. And then you actually have to write what you do. So for example, for Uber drivers, I put taxi, Uber driver, right? So that's kind of how they know that you'd be a Foodora rider. We would put Courier, Foodora rider, right? If they want to look closer into that, to say something like, okay, your supplies category seems a little excessive, which they won't, because unless you're spending ridiculous amounts of money on gear, which wouldn't make sense because you need money for rent, so you're not really going to blow all your money on gear, they're not really going to look into your situation. If they ever did, and they did start denying things right off the bat, you'd obviously appeal that and say, no, I'm a Foodora rider, that's my equipment, I need that, that's safety, otherwise I'll die in the winter in Toronto. And they come back to you and they say no, and you go to arbitration, and then they say no, and then you go to Supreme Court, and eventually it says, yes, this is fine. It almost never gets there, because it almost never even gets started, in the sense that they're not going to stress. Like I mentioned at the beginning of this, before we even started, if you pay the government something, because as self-employed people, no one is taking from you initially, which means you will, as long as you're making money, you will always have a tax bill every year, okay? Guaranteed. So if you owe the government $2,000 and then you pay them relatively on time, they're not going to bother you. They're not likely to bother you because you've given them money. If you have your income at $20,000 and your expenses at $30,000, now you're -10, it may bother you, right? Especially if you received a benefit from that -10. Maybe you had a regular job as well, and that -10 hooked you up with a refund of $3,000. They're probably going to start asking questions. Is this $30,000 worth of cost legitimate? And they're going to be aggressive about it. But if you pay them something, they're not really going to bug you too much. Now, people say, how much should I save in order to make sure that I've saved enough? I tell clients, look, if you're going to be doing 20 to 25, kind of save like 15%. 25 to 30, save closer to like 20%. 30 of your collected, right? Because a lot of people, honestly, we're here, we're being proactive, we're trying to educate ourselves and empower ourselves to get better at this stuff. But that doesn't mean tomorrow you guys are all going to be accountants and bookkeepers and be super organized for the rest of the day, right? That's not how it works. So what we recommend to clients is keep it simple, save at least 10 to 20% of whatever you make, and you can find whatever's reasonable. The more money you make, the more you should be saving in that 10 to 20% range. 10 to 20% of what you collect. That way, if you collect 40 and you save 10% of that, 4,000, or let's say you save 20% of that, 8,000, that's a ton, right? That's more than you needed to, because your taxes are going to be calculated based on your net. So if you say, okay, I saved $5,000 on my 40K collected, but my taxable income is actually 25, right? Maybe you expensed out 15. The tax payable on 25 is going to be like half of that. And so the other half is your refund. It's your oversaving. If you get to August or September, kind of the end of the season before it starts to get worse and you may end up slowing down yourself or just not making as much, at that point, do an estimated tax calculation. You can use the software because they're already available by then. Just gross up your income to count for the remaining 3-4 months of the year, right? And then add in, just throw in your expenses that hopefully you were accounting for, or just estimate them at the very least, and see what number it spits out. Because we're talking about saving 20% of your collected income, but paying tax on 20% of your net income. That's where the oversaving comes in. So if you find yourself cash strapped, just do a quick check so you're not dipping into your savings for tax more than you need to. Right? Because I had a client, we had the same conversation 3 times last year, save this, save that, and he saved it, and then now we're doing the taxes, and he's like, all right, how much money do I owe the government? I'm like, well, you saved $5 grand, you actually only owe the government 1. Nice. You oversaved. But that's because we didn't know what his costs were until he organized them in December. And it's like, well, at least you were prepared, and now the remaining $4,000 is his refund. Tax brackets are not what you think they are. If you make $30,000 taxable income, you're still within that first bracket, because the federal level is like 0 to 44,000. The provincial level is 0 to 40, right? Mm-hmm. But let's say you make 60. And let's just say the first bracket goes up to 45, just to keep it simple for both levels. You're going to pay that first bracket rate on your first 45,000. Then the difference of your income minus that first bracket, okay, so 15,000, is then going to be at the new rate. It's not as though you're now at 60,000 and everything gets pushed into the new rate. No, it's a tiered system.
Mind repeating that?
Yeah, for sure. It's super confusing, absolutely. So we have income rate groups, right? So the first bracket bracket, 15% federally, $0 to $45,000, roughly. All right, don't quote me on some of these numbers; they're just generalizations. Second bracket, $45,001 to I don't know $70,000 is 19%. Let's say, right? First one's 15, second one's 19. Then it goes up. So if you make 60, the first 45,000 that you make on that 60 is going to be taxed at that lower 15%. And the difference between 60 and the 45 that's already taxed, 15,000, is going to be taxed at that new second tier rate. Not in addition to the 15, just at 19%. So you're not paying tax twice, right? So if someone says to me, how much do I need to contribute to my RSPs to bring my income down to a lower bracket? I don't really say a lot because there's not a lot to say because it's marginal. It's not bracket. They're tiers. It's different, right? People don't really get it, and I explain it, and they still don't get it, and that's fine. So don't stress about your brackets because I think someone mentioned there's only one Foodora rider, maybe two in the city that are making like 80, 90K. So you guys are pretty much going to be in that low 45K bracket after expenses anyway, right? So you guys don't have to worry about the concept of brackets. Because if you make 40K or 50K, you're outside of the bracket. Your expenses are going to be 10. Now you're inside the bracket, right? But there's nothing lower than the lowest bracket.
Works the same way for the HST, like
no,
for
HST
6
is
months?
fixed.
Oh,
HST
so you still pay HST
you
for the
collect
30,000.
Yeah, you collect it. You subtract what you've what you've spent. In minus out, you subtract what you've spent from what you've collected in HST. You give the difference to the government if you're responsible for collecting HST. Okay, most riders will not even be. There will be some full-time riders definitely who will be responsible for it. And I have some clients who are responsible for the HST as riders. But a lot of people won't be, especially students. You don't even have to worry about that stuff. I think you like that. Not really. The government does like consistency. We like consistency in what we do. But when I first started out, and I've always been legitimate about my taxes, year 1 to 2 was double the income. Double a small amount of income, but double the income nonetheless. Year 3 was triple, quadruple. I mean, you're going from making $10,000 part-time self-employed, which they don't differentiate part-time self-employed or not. They just know you have a regular job as well. And then all of a sudden you're full-time into it and you make 50,000, so you go from 10 to 50. Are they going to question your first years at 10? No, it's a starter year, right? They're not going to sweat. They're going to know, all right, 50 grand, you're going to owe us another what? $10,000. Let's do it. They're not going to worry about the 20. So I wouldn't stress too much about that junk. For the average employee, T4 slip, maybe 2. And maybe there are students that have a 2200 form, 2202. Am I adding value to those people? No. I'm not selling tax services. I'm selling peace of mind. That someone else is doing the work, someone else is going to do it, and they're going to do it right. And if the CRA wants to bother you about questions, you're going to have someone in their corner. That's my take on it. Self-employed people, we add more value to. That's why we like working with them more. Because we will have these conversations, but just a little bit more intimate, right? One-on-one or over a phone call or something like that. So if you are super organized, you are not going to get a different result than I am in the tax software. Because math is math. If you put in 5 and I put in 5, our output should still be the same, right? That's just how it works. But the value is, again, we're selling confidence. We're selling stress relief. I've had clients call me up and they're super stressed and I'm like, all right, send me over your stuff. Even if they're employees and they're 5 years back, they're super stressed and I'm like, yeah, send me over your stuff. All right, here's your stuff back. Literally in 20 minutes it's done. Granted, I'm okay at my job, but that's how easy it is, but I'm not selling tax services. So to answer your question in a shorter way than what I just did, are accountants beneficial? If you are uncertain, unsure, scared, and need that support, absolutely. Their value is clearly there. If you're on top of everything, you understand taxes from before, maybe you did them when they were simpler for you and now you've just slowly added more complexities, then not likely. I've talked so many clients out of being our clients because like you go do it. They're like, oh, I have one job and I got married and I bought a house. I used to do my taxes, but I got married and bought a house. Now what? Do your taxes. Right? Like it's the same. The house, all right, there's a line. Did you buy a house this year? Yes. Okay, that part's done. Did you get married? Did your marital status change? Yes. Okay, well that didn't change any of the numbers anyway. Literally didn't change anything. And I'm just like, guys, you can go do it yourself. Don't worry. It's free up my time to take care of people like you. So that's kind of the gist of whether they're of value.
It's also isn't it educational? Like I didn't even know like if you claim a bike, you can only 20% of the little things. and I don't want to like claim too much. Like you said,
That's right,
it's
and
stressful.
that's where your value
That's
is.
why I'm
right.
like stressed. Like, oh, I'm gonna claim too much. I'm not gonna do it right, and then if I get audited,
then you're gonna
you know?
feel uncomfortable about it. And
Yeah.
that's where the stress is, right? Like
Yeah.
that's what we're helping people with. But if you're not stressed at all, you understand the ins and outs. It's super basic. I mean, it's not rocket science.
That's the way to get rid of stress is lots of exercise.
Yes, so just keep riding, just ride harder, and relieve all that stress. So, yeah, someone like you may choose to have an account for year 1, right? And then you'll be fine
Yeah,
year 2 and
that's what I
3.
wanted
That's
to-
normal. I've
Yeah,
had that
that's
so
what I
many
wanted to
times,
do.
right? Keep in mind that depending on who you go to, like I can't speak for anybody else except myself and my team. We do try and educate our clients as much as we can, knowing when the deadlines are, making them feel comfortable with the bike depreciation schedules, things like that. To most accounts, I've had people who transition from H&R Block to us when we used to do in-person appointments. And I'm like, oh, so where'd you do your taxes last year? Like, oh, I went to the block. Okay, how was that experience? I've never been. And they're like, it was terrible. I sat there for an hour and a half in complete silence, no one talking about anything. And then at the end of it, they told me to sign here and then they gave me a bill. And I'm like, that doesn't sound like a great experience, but that is what a lot of these tax places are doing. It's not just the block, it could be anybody. Right? So, who you choose to work with is the next step in once deciding you're going to work with someone, right? You want to work with someone who is going to answer your questions, relatively timely, relatively knowledgeable, has your interest at heart. I've seen so many self-employed tax filings where they'll start with us, let's say 2018. I'm like, all right, well, let me see your 2017 taxes, just so we can compare, make sure we're relatively consistent. If we missed anything, as we're the new year for the accounts. And I look over and I said, oh, advertising. You had some $1,000 worth of cost last year, 2017. What do you have this year? I'm like, what advertising? What are you talking about? I'm like, advertising. You know, website, business cards, whatever. I didn't have any of that ever in my life. And I'm like, well, where did this 1,000 come from? I don't know. The other guy just did it. Okay, cool. Right? Because we have an issue in this industry where we want to get people the lowest tax owing or highest tax refund possible. And certain people and companies have taken that to a point where they will start to push the boundaries because it's within reasonable amounts, right? Even if it didn't exist, it's a reasonable amount. I'm not down with that. We will only record what's accurate, what you can substantiate, and what you're comfortable with. That's how we do. The format in which you're going to present your numbers to, whether it's to an accountant or to a software in general, because it's pretty much the same thing, is going to be one that makes sense to you, but the minimum requirement is total income, total expenses by general category. That's it. You don't want, this is my total expense, it's $20,000, because I can't do anything with that. But if you're like, this is my meals, this is my bike repairs, this is my bike cost, this is whatever, and it's by general category. You can say, this is my total supplies. If it's high, I'll be like, well, what's in there? You'll be like, oh, this is in there, bike shoes, this is in there, that's okay, cool. That sounds fine. Right? Just so I do my due diligence to say, okay, you didn't throw in a $3,000 bike for your supplies. Because I would recommend against it, but it happens.
But the meal you don't need to bother.
The meal you don't need to bother with. You need the hours on shift to get that calculation.
What was like your company's name?
Oh, okay, yeah.
Because I have to leave to work.
Let's
actually.
do some plugs. Okay,
so
so
just quickly.
This is not to drum up business. I don't mind if we don't work together. We're pretty busy. It's already April. But if you want to work together, we can. A couple things about us. One, we are as transparent as possible when it comes to our process and pricing. So everything is laid out on our website, at the very least, these starting rates. So all of our starting rates are posted on our website, and how to file with us is also there. We are an online company now. We've officially transitioned as of January this year. So we do not hold any in-person appointments for new clients. And so what that means is everything is done through email and remote and secure file transfer. Okay? So we have an encrypted way to send over sensitive documents. Your numbers and your Excel file, not so sensitive. Your social insurance number, very much so. And so we have an encrypted channel for that. Our rates are posted there. So for self-employed people, which you are now, it starts at $180 plus tax and goes up from there. Okay? Again, full business expense. You're only paying someone to help you because you have a business. Okay? But it does qualify as the next year's business expense. Now, it does start at $180 and go up from there. Does it go up a lot? Not really. Because we're an online company, we do spend the time emailing or having conversations like this, coaching people on how to get organized. Remember, total income, total expenses by general category. That's your minimum requirement for anything, whether it's doing it yourself or having someone else do it. So we have an Excel file online. It's not great, super basic. You can download it directly from our website and use it for yourself, modify it, just use it as a general template and guide. But we expect some sort of email with your numbers, whether it's Excel, a Word document just written out, or however you want to organize it if you're going to work with us. We will then look at those numbers, interpret those numbers, put them in the system. That's the easy part. We will ask questions based on the amounts if we feel something is different or if we feel you've missed something. Often people miss things like cell phone and whatnot, but that's what we do. That's the value we add. And then we put it together, send it back for review. If you have questions, changes, or notes, you let us know. We make those. If everything's good, or once everything's good, we send you the form to sign, all done electronically, and then we send it in. Our company, yourmodernaccountant.ca. I think the .com redirects to us now. Anyway, .ca. I wanted Canada, because that's what we want. And you can look us up there. Now we are a small company. When I say small, I mean me and 2 others. That is a microphone. We're a nano company. I also do have 2 others who are more part-time, so technically there are like 5 or 6 of us if you add up the part-timers. But what that means for clients is 1, response times can be slowed. I have 100 emails and I'm doing this and not answering those. So there's obviously a delay. My other team members, they're better than I am at email, which is great for them and their clients. So you know, you may get a fast turnaround, you may get a slightly slower turnaround. We do need a few weeks to make sure we're on top of this stuff because of the back and forth that we can have. Sometimes it's super fast, right? Sometimes it's a little bit longer. Now, in terms of our case, we talked about as remote. If you do work with us and when you do start, we will connect you to a specific person, whether it's myself or one of the team members. That way you can ask them the direct questions you have. You're working with an individual in Toronto in this case. So in Canada, it's not as though we're outsource our work to somewhere else. We would never do that, and we say that on our website. So you will be connected. It's not as though the company is doing your taxes and you're just asking the general account, info at your modern account questions, right? You will be assigned a specific individual. We have 2 deadlines. We have the tax filing deadline. That's the same for the HST filing, okay? But then we have the tax payment deadline and the HST payment deadline, which is the same. So April 30th is the tax deadline for most people. For self-employed people, that is not the case. Self-employed people, their HST and their income tax and their spouses or common law partners' income tax is not due until June 15th of every year. This year it's a Sunday, therefore it's due on the Monday, 16th. Really quick, the amount owing, however, is due at the end of April, which I know it's backwards, right? Don't get me started. I don't know. So what that means is that if you owe the government $1,000 and you get your taxes filed in May, right? Let's say you get a second week of May filed and you're like done. You owe them $1,000. You're going to be on time, which is great. But you're going to be late for payments, so you're going to have 2 weeks worth of interest, which again, interest is like 5-6% annually. On $1,000, it's not very much. It's like $5, right? Like it's tiny. So don't stress about that so much because you want to, if you're going to stress, which I hope you don't, if you're going to stress about the deadline. Because if you're late, if your deadline is June 15th, or in this case, June 16th, and so then you submit June 17th, if you're 1 day late, you will be hit with a 5% late penalty on the balance you owe immediately. And then if you choose to not even file after that, you will be hit with a 1% a month penalty on the balance you owe, plus interest. This is just penalties, plus interest. 1% a month up to 22%. So you could pay about 27% penalty if you owe them money and didn't file on time, plus interest. That's what kills it. It's the late filing penalty that kills it, not the interest, because the interest is small, right? Especially if you file in July, right? Your interest from April to July is going to be not much, but your penalty is going to be 7%, right? Or probably 6%, which is high. Your interest is going to be like a fraction of a percent. So that's a big difference. Your tax burden is not going to be as serious as a non-student. And the reason is tuition credits, right? We pay tuition, the federal government gives us a credit for it, which helps lower our tax balance. The provincial government got rid of that credit last year because we're supposed to have free tuition, but that's not real either, so we get no benefit. So other than the tuition, that's the only added value for a student. There's no other added value. But between being a student with tuition, therefore in school, whether it's 20 hours a week or 30 hours a week, and riding, you're never going to hit that 30,000 mark anyway, unless you're like killing yourself. So you don't even have to worry about HST at the very least. You could know without any tracking, you're not going to hit 30,000 worth of sales being a student and working this job, right? So you're like, I don't even have to sweat.
What if you do though?
Well, then you better have track. Keep an Excel file or a notes file, whatever, and just add your income to it every week. One number once a week, and have it sum up to the total, so that you're like, okay, I'm at 20, I'm at 25, I hit 30, better start thinking about HST, right? And then worry about the expenses after. That's the minimum, right? Every year we get better at what we do. No one's going to be perfect tomorrow. This year, you're going to try harder than last year. Cool. Next year, you're going to try even harder, and you're going to get on the expense side of things. You're going to understand the HST side of things. Take it 2 years to do it, 3 years.
It might not be costing you to track, but it costs
Time.
and that can be valued as well. So
Yes.
you do need to consider, like, okay, how much am I putting into this spreadsheet, and is
Versus
it worth it for me to put that much time and
That's
effort
right.
into my spreadsheet?
Absolutely. But it pays to be organized. It costs to be organized because it's your time not on the street riding. But right now, is this costing you money or is it already kind of downtime? Spend 10 minutes to add in your income that you got paid this morning into your phone, like a notes file. We're not talking about spending hours a week or hours a month even. We're talking 5 seconds, you know your income is even roughly $800 later, $842. Cool, 840, done, whatever, 850, whatever, if you really feel you're pressed for time. Because when I said at the beginning, I pay the least amount of tax possible because I'm organized, because I made sure I've tracked every dollar in and out specifically. That's why it pays to be organized. It might take time, but you know you're giving the government the least amount of money possible, right? Whereas I've had clients who are like, I didn't make any money last year. I was living hand to mouth like it was crazy. And I'm like, okay, fine, let's see your numbers. And we start putting their numbers together slowly and slowly, and we get them together, and they're like, actually, you made $15,000 last year. Your tax bill's $1,200. Like, I don't have any money. I'm like, yeah, I know. You told me that to begin with. But that's the answer. So paper financials and real life are nowhere near reflective of the same thing, right? Because you can be cash poor, but on paper rich, right? Which is where the bike costs come in, where you spend $3,000, $5,000, $7,000 on a bike. You don't have that money, but you don't get the full expense of it. You only get a portion. So the government thinks you still have a portion of that money. You have to pay tax on it. But it's tied up in a bike. So you can't physically get at it. Now you owe the government money, and then you're two taxes. Because it's capital asset, that's right. It's capital cost. And so you only get a portion of it. But it's not like you're going to sell the front tire of your bike to pay your tax bill. It's not going to happen. The business name is just your personal name.
Okay.
If the system allows you to override that and just check, just keep it blank, keep it blank, that's fine. But in my system, and the one we use, it doesn't. So we just copy the personal name, put it in the business name. The business address is your address, right? It's not Fedora's address because you are not Fedora. It is your personal address or your office address. This business address is here, but maybe the mailing out address is the guy's house.
Got it.
Tax returns can be as many as 30 pages or as little as 10.
I know you have
Right.
to complete the T1.
So the T1 general. So if you're using software, if you're using paper forms, that's a good question. But hopefully no one's still using paper forms. No? Okay, cool. If you're using software, if you're gonna do it yourself, TurboTax is fine. H&R Block software, I don't know. I'm sure it's fine. Simple Tax is a great one. SimpleTax.ca is absolutely free by donation. Made in Western Canada. Those guys are cool. I remember checking it out a few years back when they started. They're cool. You don't have to worry about the forms. You just go through their steps, right? And whatever numbers you put in and information, T-slips, so the T4s or any extra income slips there, it's going to produce everything for you.
Okay.
So don't even worry about what forms you
So the T
necessarily.
forms are just basically Revenue Canada forms.
Yeah, exactly. Exactly. SimpleTax.ca. Yeah, they're cool. Their user interface was like the best. They're more likely to pick you out randomly than target you specifically, because your overall incomes are not going to be huge. Compared to what other people are doing, not me at all, but compared to companies are obviously doing $500,000 a year, $1 million a year. They're multi-million-dollar companies. They are going to focus on those guys. They're also going to focus on certain industries, cash-based industries. You guys are not a cash-based industry because Foodora tracks everything through their app anyway, so you don't have to stress about that. Right now, they're going after people like Airbnb. Though it is not a cash-based business, people still don't report it. So the CRA actually has a seat at the table with Airbnb. Airbnb sends over the data reports on who's made how much. The CRA goes through that, checks again the taxes. They didn't declare rent income this year. No, you made 50 grand. Let's have a conversation, right? Now with you guys, I don't think they have a seat at the table with Fedora right now. Anyway, they're not super stressed about it. this point, from what I can tell. So don't be worried about the government in terms of if you do push a little bit of your expenses or you forget $500 worth of income. I've had clients forget $30,000 worth of income. Like, it just happens, right? Some people just don't want to pay, and it's a self-auditing system. We tell the government our situation.
Never don't answer them.
Yeah, when they do call, it's worth answering. Even though there are so many scams out there, it's worth just seeing what they want. And again, take the note of what they want. If they want cash on the spot, that doesn't exist, okay? These scams, I'm surprised how many people fall victim to them because the CRA does not accept any form of payment that isn't an online payment like through the bank anyway, directly through your bank, or a mailed check to the Sudbury address, because we're in Ontario, made out to the Receiver General of Canada. That's the only two forms of payments. No Bitcoin, no credit card, no gift cards.
Needs to send money
No,
right
no,
now,
no
or you're
credit
gonna
card?
end up in jail.
No credit card.
Fuck that.
They will force you into debt to pay their tax bill by telling you to go to a bank and get a personal line of credit, but they will not force you into debt by asking you to take it from your credit card. You can't pay your tax debt by credit card. You can take it out. Yeah, you can take it out from your credit card yourself. You can be like, look, give me a cash withdrawal, put it in your bank, then pay the money. Cool. But the CRA only takes bank payments.
And by the
checks
way,
by
they
mail.
see all of your transactions, so
They can.
The CRA at first seems extremely intimidating.
Yeah.
Right? And actually, like 10 years ago, I owned my own landscape business, and I went through a divorce. They shut my accounts down completely. One day, I just showed up at the bank.
Yeah.
Everything was done. I called my CRA agent, and she released my funds like that moment. You don't have to be intimidated. They're actually there to help you. As long as you're not like scamming them or doing anything, you don't have to be intimidated. Just contact them and don't be afraid. Like
That's right. Now the things to be afraid of, if there's anything, which again there really isn't, one, be nice to them. Unfortunately, the other person on the other line has the ability to do a lot of things that they shouldn't have the ability
don't
to do.
swear at them.
No swearing. No calling them stupid. If you're starting to get worked up, you say, hey, I got a meeting to get to. Let me call you guys later. And you'll find a different agent. You'll never get to the same agent, right?
Yeah, right.
If you're working yourself up, do not get angry at them. They are there to help you, and they will try. But they are relentless when it comes to you're rude to me. This conversation's over. They will do whatever they can to nail you to the wall for no reason, none at all. So
swearing at and swearing is the same thing to the CRA.
No. Yeah, no.
It does not matter.
No.
If
Children's
you
talk,
are
kid talk.
unfiltered, they do not. They don't care.
No. You gotta be super nice. And if you don't know the answer, don't make one up. Just write down the question and
You can
tell
tell
me to
them.
get back to
You
you
can be
later.
like, hey, I'm starting to feel really stressed out. Can I call you back, or can you call me back in 15 minutes? Just don't swear at them.
Yeah, no.
Don't accuse them of anything.
Yeah, never accuse them of anything. Because they don't know. They're just a cognitive machine, right? So, well, you don't negotiate because they will always want their money. Right. That would be great. And some people do negotiate and back tax. That's a different thing. So what happens is when you get your notice of assessment, regardless of if you're an employee or self-employed, doesn't matter. You get your notice of assessment and you have a bill. It says on there, if you can't pay this bill, call this number, we'll set up a payment plan. No problem. Your payment plans can range from 12 months to 24 months. You will continue to pay interest on any outstanding debt. That's normal. It's about 5-6% annual, so it's not crazy. So you pay them what you can, good faith. You know, like, oh, guys, I only have $500. Here it is. You can have it. And they're like, okay, this person wants to work with us. They're demonstrating that. All right, we'll set them up on a payment plan. If you agree to a payment plan and you default,
you're fucked.
You will not get another one.
Hey.
Okay? So when you are negotiating with them, and this is what I tell all my clients because we can't negotiate payment plans on behalf of them because I don't know how much they want to give away. Let's say you're like, okay, my bill is $5,000. I can do $500 a month for 10 months. You know that's what you can do. You tell them, all right, let's do $250 a month for 20 months. And then you give them $500 a month. Okay?
And they're not going to say, hey, wait a second.
Why are you giving us more?
They may say that.
They
may say, hey, that's, and then you have to provide evidence to why you're only able to provide that much money, period, per month.
But you definitely don't want to be optimistic now. Set yourself up for failure tomorrow. If you're behind in your taxes and you're self-employed, I mean, the process is the same. You have to total up your income and total up your expenses. If you're an employee for those previous years, or a student, which is not uncommon, they'll just forget about it, they don't care about it. It's so much easier because you're just getting the slips from the institutions, the employer and the school, stuff like that. You're just filing that stuff. If you're self-employed, you're going to be going through the work of combing through bank and credit card statements from previous years, adding up income that you can understand as income. Again, if it was cash, you're going to forget about it by now. And just coming up with that same spreadsheet where it's like income, variety of expenses.
What if
right?
you estimated?
You can
I made.
If you can
spent this much
prove
this
it.
year, I probably made this much those previous years. So just.
If the CRA comes asking and you tell them it's an estimate, they're not going to be happy, but you don't tell them initially, so obviously it doesn't matter. It's no different than what in reality.
My mom got audited one time.
Yeah.
And it was because of what you did and exacerbating circumstances. It was a bit like complicated and a bit of a hell, but generally all they're looking for is deviations from a norm.
Yeah.
It's something to flag. So like, oh, this person's claiming like way more than everyone else who makes this much money.
Within that industry.
Is making. So as long as you're estimating within a fair way.
Yeah. And that's where an accountant would actually add some value, is because they would be like, well, the other riders, based on what I have here, probably wouldn't have claimed that high, or in that industry wouldn't have claimed that high of this particular expense, especially if it's estimates. If it's reality, go ahead and claim it. You might get audited, and it might be a pain in the neck, but it's within our rights to claim what we feel is a legitimate business expense. Now, once your friend has everything, or anyone who's back in taxes has their total income and a variety of expenses summed up, the next step is either filling out the forms yourself or talking to an accountant, having them do it, and then deciding, because once someone fills it out, let's say we fill it out, we'll say to you, all right, let's say you're 4 years back. Once we put all the data into the system, we will know exactly how much principal you owe for each of those 4 years. And depending on how much that is, whether if it's a refund, we'll just file it regularly. But if it's in a large amount owing, we might use one of the programs that the CRA has, which is the voluntary disclosure program, which is the government's ability to say, all right, people, if you have income that you didn't report, including total tax filings or partial tax filings, let us know, and we will forgive the interest and penalty portion at the very least. Right? Because otherwise you're 4 or 5 years back, you're talking 20, 30% penalty, let alone the interest that's also accrued. Right? It can be huge. So we would then assess what the best option of submitting it is. Now, if the CRA reaches out to the person already and says, you haven't filed your taxes, we demand you file them, you cannot go through the voluntary disclosure program, and therefore you cannot relieve interest and penalty relief. You're just stuck holding a large bill.
Another thing I should point out is that, like, if you get stuck with a large bill for your taxes and you can't pay that right away, you can, like, as long as you're, like, communicating with them fairly regularly and saying, like, look,
reach out to them.
Reach out. If you ignore them, then they're going to think, oh, this person's...
That's when they start to get aggressive, because they're not actually trying to be aggressive to you, they're just trying to get your attention. Right? That's all they're doing. They're trying to get your attention. So even if you don't set up a payment plan with them and you owe them $5,000 and you just started paying them a little bit, every time collections called you, you answer and say, oh yeah, I know I owe the bill. I'm still working on it. You can see I'm working on it. You say, oh yeah, I see. All right, keep working on it. And they hang up and they won't bother you again until your name comes up in the queue again. And then someone else will call you in a month's time and just keep updating your account. So that's the best scenario, especially if you owe them a large amount, because you're not going to set up a tax bill. Now I do have one client. He owes them $250,000. But he's an old guy. He's retired. He didn't pay his taxes for the first 4 years of his post-retirement. Well, he was self-employed. He's still working for his old company. He was making like $100K a year, and so his taxes were $30,000 a year, and he didn't pay. So in the first 4 years he didn't pay. They shut down all of his RSPs, all of his investments, everything. They took all the money away from him. Every dollar he had. Everything. In the next 4 years he didn't do it. Then he called me in to do that. I did him. We put it together. I said, oh yeah, you owe the government, I don't know, $150,000. Okay, cool. Like, oh, what are you going to do about this bill? Nothing. I don't have any money. I don't have a house. I don't have any kids you can take. I don't have any dog. That's it. So now he has a bill for $250,000. The government knows they're not going to get their money. We file his taxes every year with the CPP and OAS, Old Age Security, which they cannot touch. And he owes the government another $1,000. He's like, whatever, add it to the list. No, he gets a call once a quarter from his CRA rep. Says, how you doing today? I'm doing all right. How you doing? Good. Got any money? Nope. Okay, cool. And hangs up. They understand they're not going to collect from people who don't have any money. But they will first take everything from you. Everything. Period. That's the first thing they'll do. But if you have nothing, then you don't have to stress.
I got money. You got my money. You know you got my money. What are you calling me for?
Yeah, exactly, right? Took it all. But he's a specific case because he's old, he's not working, and therefore he'll never pay off that debt. But if a young person has that kind of debt, they will hound you for your entire life, of course. That's just normal. So you better leave the country. But that's not, don't do that. Pay your debts.